Hello and welcome to this week's show, the latest edition of the Intelligent Wealth podcast. We have a very special guest today, Tim Levene, who is the partner and CEO of the UK's only publicly listed fintech company, Augmentum Fintech. So as we know, for people who've previously listened to this show is all about investments in shares and all the ways in which you can buy great businesses to make your money grow. This is really for more serious investors. So, welcome to the show today. So, just to kick off, Tim, I think we first met at a networking event in London at Jim Mellon's restaurant in the West End, and we happened to coincidentally sit next to each other. I don't
We
know if you
did,
remember
yes.
that.
I do very well. We were eating meatless burgers, which I think Jim
Yes,
Jim Mellon had invested in.
yeah. The what do they call it?
Was it Beyond Meat?
Yeah, these were what we call lab produced meat, don't we? Yeah, so that was interesting. I mean, I'm vegetarian, so I couldn't even eat lab produced meat, but I'm told it tasted very much like a normal burger. Did it to you?
I think so. I think if you put enough sauce on it, then it can taste sort of, like whatever you want. But yeah, I think that market has had some ups and downs since then.
Yeah, it's an interesting one, definitely very interesting. Um, Now, I've been looking forward to this because I feel that the UK technology market is undervalued, underappreciated because, of course, US seems to control everything these days, tech wise. But apparently, we're one of the highest ranked countries in the world for fintech, aren't we, Tim?
We are indeed, and actually, um, certainly London um, is the second most active fintech city globally
Hmm.
for
Hmm.
investment, and the UK attracts more investment than the rest of Europe put together. So we are very much a jewel in the crown of UK PLC,
Yeah.
and it's been a long time in building this ecosystem. And I think what's exciting about the sector that's being built is that there's still a long way to go. And I think for
Yes.
investors like ourselves, but also those that are looking to build exposure for the first time, it's going to be a
Yeah.
pretty exciting decade ahead.
I think so. Um, As I say, I do think the UK market is underestimated. We've got some great technology companies behind the scenes. They're not as high profile as the likes of Google, of course, and Microsoft, but nonetheless, there's a lot of great companies. Don't you find that, like from the companies you've invested in?
Absolutely. And I think if I go back 25 years when I was involved with a business from the very beginning, a business called Flutter, which
Uh huh.
merged with Betfair and has become a FTSE 100 business, albeit it's since moved to New
Uh
York
huh.
Stock Exchange. And that was really what I would define as Internet 1.0. And I think over the last
Yes.
25 years, I've seen an incredible growth in the UK technology
Mm.
market. And that's been driven by a lot of success stories. And I think when you
Yes.
have a success, what's fantastic about the platform and ecosystem that we built here, it reinvests, and you see it kind of morph into other opportunities. So it's not just those early investors that reinvest their capital in the next generation of tech companies, but it's also those people that work in these businesses and they see firsthand what a success story looks like, and they go
Yes.
off and build their own companies. And we're seeing now, 25 years on, second, third, fourth time round founders, entrepreneurs that have been in one or two fantastic success stories go off and build their own.
Mm.
And that's what you need. And everyone talks about Silicon Valley having a 40, 50-year head start, but it's true. Silicon Valley is still kind of the benchmark.
Mm.
But fundamentally, London and the UK more generally has built very much a technology sector that is the envy of many others. And I think what we've done in fintech has, really alerted many other countries to the success we've had, and they're trying to find ways to replicate it. So we've come a
Mm.
long way. We have a market leadership, but in many respects, others are looking to steal that market share. And so we can't rest on our laurels, and we have to continue to invest. And that's
Mm.
certainly something that we have said as an industry, but also as Augmentum, we've made that very clear with our request to the new government coming in that they continue to support an industry that's made great strides, but has a very
Mm.
big decade ahead with the right level of support.
Yes, of course. I know that the first iteration of Augmentum Fintech was as long ago as 2010. But before we get on to that, I just wanted to find out a little bit more about yourself, Tim. So, can you tell us a little bit about your background? Like you growing up, did you grow up in a wealthy family or a poor family? What was the kind of area you went to school? What kind of school did you go to? That kind of thing. Give us a bit of background to yourself.
Yeah, well, I'm a London boy, born and bred. Um, I've lived all over the world, but always come back to London.
Uh huh.
I grew up in North London. I went to school
Right.
in the city of London, City of London School.
Uh huh.
I guess I came from a kind of very classic middle class background. My father was
Okay.
first generation of his family to go to university,
Uh huh.
and very much kind of held a high regard for a good education. But at the same time, I think going to school from the suburbs of North London, taking the tube an hour there, an hour back every day, really,
Mm.
I guess gives you a sense of independence from a young age. I think from the age of
That's
9, I
good.
was taking the tube,
That's really
and
good. Yeah.
I think I always look back at what really triggered the desire to be an entrepreneur, to be independent, to build your own, hopefully success, but to take
Uh
risk.
huh.
And I do look back to those school days from a young age of having to fend for yourselves in the early 80s, and find your way and navigate your way through the city, and all that went with that. So I think those kind of laid really positive foundations.
That's good.
Um,
That's good.
and really from school, I went to University of Manchester. I studied Russian of all things in the early
Uh huh.
90s. There was a lot happening post Berlin Wall collapse,
Uh huh.
and I was incredibly fascinated with the opportunities in Eastern Europe. I
Yeah.
was much more of a linguist than I was a scientist, so I studied French, German, and Russian. And at university, I really majored on Russian and Czech. And that took me to Moscow in the early 90s, and I
Wow.
saw firsthand the entrepreneurial enterprise of a generation that had been frankly suppressed for many years.
Mm. Mm.
And for me, that was incredibly exciting. It was
Yes.
a very tough time in Russia. It was exciting, but trying to do the simple things in life were pretty challenging. But I got to see large parts of the country, many cities that hadn't really seen any Westerners for 40, 50 years because they've been scientific cities, so they've been closed off,
Uh huh.
frankly, to tourists. So that was an incredible life experience. And I went from Moscow. I worked for a US consulting company called Bain. I moved to Sydney, spent nearly 3 years in Sydney, and then having spent 3, 4 years at a major US kind of strategy consulting business, and I learned a lot along the way. But a lot of my peers were going off to do MBAs at Harvard and Stanford and
Mm.
INSEAD, and that was the kind of the hallelujah moment for me of, do I really want to go off and be a student for 2 years and
Mm.
get myself into significant debt with these excessively expensive MBAs? And I'm not quite
Mm.
sure what it would have done for me. And everybody goes to Harvard for 2 years, comes out and says, I have an MBA. I want to be an entrepreneur now. I want to go back into consulting. And I thought, well, why don't I do a real life MBA and start my first business? And that was really the first moment where I went out on my own. Um, I opened one of the first juice bar chains in the UK, a business that
Oh, really?
became known as Crush,
Uh
and
huh.
built a successful business in London, which unfortunately really suffered during the pandemic. But in parallel with that, I was really taken by the early growth of the internet
Yeah.
in the late 90s, and I saw the impact that it was going to have, and I was
Mm-hmm.
fascinated by the opportunity that it presented. And
Mm.
along with a a couple of former colleagues who worked in San Francisco at Bain, they had come to London and said, we feel that the UK is the perfect place to launch this idea that we have, where
Mm.
we're going to disintermediate and disrupt the global betting industry through technology, through the internet.
Mm.
And that was the genesis of what became Flutter.com, which we launched in April 2000. And, it took me on an extraordinary journey of a hypergrowth business, raising
Mm.
capital at the absolute height of the dot-com boom,
Mm.
and then feeling the dot-com bust a few months later. But we managed to navigate our way through that, having raised quite a lot of venture capital. But it was a journey of huge learning where we had, frankly, a lot of great ideas, a lot of promise. But I
Mm.
think we all demonstrated that we were classic consultants, where we could sell a great idea, but we weren't particularly effective at executing it. And I think
Ah.
we learned firsthand it's not just about the idea and the capital, it's about the execution. And so I would say it was a really challenging journey early on,
Uh-huh.
where we really did struggle to execute the vision. And a business called Betfair came along that had a lot less capital than we had, and we saw them generating a lot more traction than us in
Uh-huh.
late 2000, and it really opened our eyes to how well they were doing on a fraction of the capital that we had, but they just had executed their idea um, far better than we had. And so if you
Mm.
can't beat them, join them. And so
Mm.
we really took a lot of what they had done, we replicated it. And in time, it became quite clear that the two businesses were really dominating the market.
Uh-huh.
And it was an emerging market, so it was still very, very small. But the market opportunity was significant. And I remember sitting down with the early founders of Betfair and talking about, was it a good idea to put the two businesses together? Did 1+1 = 3? We were
Mm.
trying to build, the leading exchange, so a real marketplace for the betting industry. And not only did that deal come off, but 1+1 = 10 in the end, because the network effects of putting the liquidity together
Mm.
created an incredible compound effect and took us on a extraordinary growth journey, which was a fantastic thing to be part of.
Yes, interesting. Um, so it sounds to me as though you've had multiple business interests, and some you've run side by side with Augmentum Fintech, like your juice bar. You said it was only affected badly by the pandemic, which was quite recent, wasn't it?
Yeah, so I became many years ago a passive investor. So
Ah.
I think Augmentum since 2010 has been all I've done. That's really what I do, day to
Okay.
day. So, I think it's great to be part of these stories, and both, Betfair and Crush were businesses that I helped,
Yeah.
build from the ground up, and then stepped away and let others kind of take it on and take them in Betfair's case to, far bigger and better things. And,
Yeah.
as we said a few moments ago, it's become, a very significant business, which I watch with admiration from afar, but I've long been out of that business
So,
now.
so can I ask you, were there any specific gems that you learned from Betfair's better management of less capital? I mean, what did you learn from that? Was it just more professional management, or more expertise, more experience they had, or what was it that you took from there to
Well,
help you
yeah,
propel to
it's
success?
it's a really good question, because I think we saw in 21, when there was a flood of capital that came into the venture market post COVID, that you can give too many companies too much capital too early.
Yes.
And often, when you have a smaller amount of capital, it really focuses the mind.
Yes.
And I would say Betfair was a great example of having a very clear vision. They had a small team, but with strong capabilities, and really had to think very hard with the limited capital that they had, how to deploy that. And I would say
Mm.
we had the luxury at Flutter of raising a lot of money, having proven very little other than having a very compelling idea.
Mm.
And, I think, that for me was a real lesson that, yes, it's great to have venture capital and the capital to be able to grow, but you need
Yes.
to, make sure that you've put enough runs on the board. So it's not about having professional management early on. What you don't want is to have, people that are only used to working in large-scaled organizations at an
Yeah,
early stage. You need to be a certain type of personality with a certain type of skill set to be able to roll your sleeves up and build these businesses from the ground up. There comes a time where, as I often refer, sometimes bringing in the grown-ups makes sense, but
yeah,
that is a certain time uh, and maturity of a particular business. But the flip side of that is you can bring in professional management too early who
yes,
can't adapt to the fast-paced nature of a high-growth business. And the trick, and I think what we've learned over the last 20 plus years as entrepreneurs, operators, and investors is there is a right moment in time to bring in a certain type of individual with a specific skill set. And if you can
yeah.
time that correctly and often preempt it, then the businesses can then really kick on at that next stage. But I've seen many experienced executive be brought in to a high growth business at the wrong moment, and it just doesn't work.
That
And
makes sense. Yeah, makes a lot of
yeah,
sense because you do read this that entrepreneurs have fast moving, growing businesses, and they grow it to a certain size, and then they find they're hopelessly out of their depth because that's the time you got to bring in the professional management that can manage bigger businesses, and just understanding that and being humble enough to accept that although you're a great entrepreneur, maybe you're not the best person to run the business. I think is quite critical. Is that what you found, Tim?
it's it really is, and it's an incredibly valuable insight because entrepreneurs tend to be incredibly driven, self-motivated, hardworking,
Uh-huh.
but often quite stubborn individuals. And
Absolutely.
self-awareness is self self-awareness is not often a quality that all aspiring
True.
entrepreneurs have, but it's
Yeah.
incredibly important to recognize that. And I think one of the reasons that Augmentum stands out as a venture investor is when they look at the investor on the other side of the table, they see people who've been there and done it before. They've been on their
Mm,
side of the table
mm.
where, frankly, we've made the mistakes. We've learned the hard lessons as entrepreneurs, as operators, and we've come to the other side and spent the last 12, 13 years as early stage investors. But
Mm.
that really does resonate. And, when we talk to our founders and say, look, often you are not going to be the right person when this
Yes.
business gets to 100, 200 million of revenue, when you're having 1,000, 2,000 people to manage. A lot of entrepreneurs hate the idea of that. It is
Yes.
a rare entrepreneur that is the right person for every stage of the journey. However, when that moment comes, however much they've recognized that 2, 3 years ago, that of course, when we get to that stage, I'm sure I'm not going to be the right person,
Mm.
more often than not, when you have that difficult conversation, it is hard.
Of
But at
course
the
it
same
is. Yeah.
time, it is really important that you demonstrate to entrepreneurs as and when it is the right moment to think
Mm.
about bringing in that professional management. And often what we do, we're continually talking, with our founders and showing them people that have managed to continue to, transition to that next stage and showing them what great looks like. And I think when you put in front of them exceptional growth CEOs, they sit
Yeah.
there and say, gosh, I would love that person to come in and run our business. They would be truly
Yeah.
transformative. And, that's really our job, is to kind of put them in front of people where they can see talent that has gone through this journey before, and other founders that have said, I had that resistance, and I've gone through it and I can see the positive impact that it's had on our business. And that's what, a role where we as active investors in our businesses, where we sit on the boards, where we want to play a role, but we want to play a constructive role, but we need to
Yeah.
work and collaborate with our founders and our management teams to, ultimately make those decisions, because we don't run the businesses. Yes, we have a voice and we're influential, but ultimately we're reliant on the exceptional execution of these management teams to to deliver that. And often the reason that these businesses don't work is not because it was a bad idea, frankly, because the execution wasn't right. And
Yes.
that's what we need to get right as an investor. not just say, wow, what a fantastic idea, tackling a big market opportunity with the potential to build
Yeah.
£1 billion business. We need to have real conviction that this is a team that's going to navigate what is going to be an incredibly difficult journey.
Yeah, I think the world's changed, isn't it? I mean, decades ago when I was growing up, it seemed that the person at the top was very autocratic and they just bossed everyone around. Everyone was scared, witless of them. But now the role of a CEO seems to be more like that of a business coach, where you're trying to get the best out of your team that will do all the work for you. And the thing I was thinking when you were talking about the strengths of these teams at different stages of growth of a business, I kept thinking of Ray Dalio's great book, Principles, of course, which you may well have read. And Ray Dalio, who's one of the most successful people in the world and very wealthy as well, runs the world's biggest hedge fund. He himself seems quite humble. You know, he talks about blind spots, that no one person knows everything, and we've all got blind spots. And I think that's what you're alluding to here, Tim, that being aware that you don't know everything. I think this humbleness is so important. Don't you agree?
I couldn't agree more, and I think I find that every year when you
Yeah.
reflect on the year just gone, and
Yes.
you look at what you got right and what you got wrong.
Uh-huh.
And we're very self-reflective as an investment team, where we
Yes.
scrutinize our decisions because we're in the business of saying no the vast majority of the time. We
Of
look at
course. Yes.
hundreds of investment opportunities and invest in a
Hmm.
small handful. And even,
Mm.
if we're deep domain experts and we're saying no 99.9% of the time, even when we say yes, once in a while, you're going to get it wrong because we're
Of
trying to
course.
back these huge uh, potential outlier winners. But
Yes. Very
when we
difficult.
have got it wrong, we really do dig deep and say, what did we miss? Why did we make the decision that we did? And how can we avoid making the wrong decision again next time? And
Yes.
for me, 25 years as an entrepreneur, as an investor, you never stop learning. And I think we're
No.
much better investors today than we were 5 years ago, and far better investors than we were 10 years ago. You need an element of luck, but you have to have the ability and the self-awareness to recognize that you're going to continue to make mistakes,
Mm.
that and you need to scrutinize where you're going wrong and make sure you don't make the same mistake twice. And I think as an
Yes.
investor, this is a tough asset class to deliver returns in. If you get it right, venture is statistically the best performing asset class, but you
Yes.
want to be in that top quartile of venture managers, where the pick of the manager is really important for those that want to get exposure. And we want to demonstrate that we are in that top quartile, hopefully top decile in time. And
Yes.
the only way you do that is by delivering success stories. And
Mm.
the venture needs time. It's not an overnight story, but fundamentally, as a listed company, we've had, 5, 6 years being listed. We've had 6 exits. All of our exits have kind of been delivered above the holding valuation, on average about 30% above. So investors
Very
want to
good.
see these
Yeah.
stories grow, but they also want to see delivery and realizations. And we just need to keep giving positive outcomes to give investors comfort that they can be patient.
One question I've been burning to ask you is why did you choose the structure of an investment trust as opposed to any other type of structure? Why specifically an investment trust, which is very UK unique, I feel. What was the
Yeah,
decision
it's
behind
it
that?
it, it is unusual because most venture capital funds tend to be more traditional GPLP structures. So
Yeah.
10-year lifespans, pension funds, endowments,
Hmm.
sovereign
Hmm.
wealth would invest.
Yes.
And I guess the entrepreneur in me really wanted to do something different. And I felt one of
Uh-huh.
the flaws in venture was when you had these limited life funds, the typical model was you raise a fund, you spend the next 3 to 4 years investing that fund,
Hmm.
you then
Hmm.
nurture the fund and look for exits. But after 3 to 4 years, you then raise the next fund. And
Yes.
it becomes a bit of a merry-go-round. And often you're looking to exit assets in that first fund so you can demonstrate track record, so you can raise your next fund.
Yes.
And what was quite clear to me was that it's not always as straightforward and seamless to say, here's the timeline, this is what we're going to do. And sometimes you need to hold on to these assets for longer. They
Yes.
take a little bit more time, or you're selling them too early purely to deliver a track record so you can raise your next fund. But actually, you're selling them too early and you're leaving a lot of money on the table. And so I felt the specific timeline was flawed. It didn't allow you to be patient. And also, I had a real frustration that this was an asset class that, as I alluded to earlier, has been one of the highest performing asset classes
Mm-hmm.
um, of them all. But it was very hard for retail investors to access it.
Mm.
Venture had been the preserve of the wealthiest, or those with the deepest pockets, the sovereign wealth funds.
Mm.
And I really wanted to find a way to democratize access where you could open up the asset class to the retail investor. And I thought the listed investment trust was the right structure by
Mm.
having that closed-ended structure.
Mm.
It, was a permanent capital vehicle as much as they can be. Of course, you can have votes to wind these up, but it
Mm.
gave you that opportunity to be patient. And I felt it was a great opportunity to see if we could, generate some enthusiasm in the public markets. And it was a really tough sell when we IPO'd
Yes.
because it was an unusual asset class. FinTech was esoteric, venture capital was perceived as high risk, and people were going on a long journey. And of course, you've got something that's priced day to day for
Mm.
assets that will take several years to really deliver. So I
Yes.
think, what we've been on has been a journey where we spent a lot of time uh, trying to educate the market on the potential of the asset class, on demonstrating that we, can build a compelling and diversified portfolio of high growth fintech assets that will in
Mm.
time deliver compelling exits and
Mm.
realizations. And hopefully, investors like the idea of getting that exposure to assets that frankly they can't get and are unlikely to get in the public markets. And, that has been the vision. We've grown it from 90 odd million to 300 million of asset value in that time. But it's been a tough journey just because the public markets have been very volatile the last few
Yeah.
years. We now trade at what we think is a ridiculously painful discount, so 30% discount to our net asset value. So we think,
Wow.
there's tremendous value there. But, our challenge is to continually demonstrate to investors, both existing and prospective, why it's a tremendous buying opportunity, not just today, but to hold, because we think there's a lot to look forward to over the next 2 to 3 years.
Mm. It's interesting. There's a 30% discount to net assets, presumably because it takes a long time to sell these businesses and grow them. But of course, if you've got a very good track record of selling them, typically 30% in uplift, then if you're prepared to be a long-term investor, it looks like quite a good opportunity for investors. Is that your feeling?
Well, I think, that's what we would hope over time. I think, of course, you need to continue to deliver enough proof points out there that
Yes.
really back up that argument,
Uh-huh.
because fundamentally, we're not alone in trading at a discount. The private equity and venture capital space, uh, it has been trading over the last 18 months somewhere between 10
Mm.
and 70% discounts, depending
Mm.
on the type of trust and underlying focus. And there's questions on valuation. These are private companies where investors are looking and saying, well, how do I get comfortable with the valuation methodology? How do
Yes.
these are assets that might not be exiting for several years. And so that has kind of been the dynamic. And what we've tried to do is to articulate these are high growth businesses. So of our 25 assets, our top 10 account for about 80% of the net asset value. So these are the more established businesses
Uh-huh.
often. They're growing on average over the last 24 months, probably around 70, 80% year on year. So high growth assets.
Wow. Incredible.
And they're valued on a forward revenue multiple of somewhere around 4.5 times. And if you look at the the global listed tech and fintech index, so these are companies that are growing north of 40%, then at the top
Mm,
of the market, they were trading at somewhere around 20 times forward
mm,
revenue and now are around 5 times. So you've got businesses growing in our portfolio at a much quicker pace and yet are trading on a much lower forward revenue multiple. Now, of course, the counter argument is, well, these are all different businesses. You can't all value them under one umbrella. But hopefully, it gives a sense to say, one, at the top of the market, our forward revenue multiple was just under 6 versus the listed market of 20. So we never wrote
mm.
them up to these fanciful multiples.
No.
And that is why we never wrote them down, because they never saw such
Mm,
egregious uplift. So hopefully that gives investors a sense that there's a lot of growth to come,
mm.
that
Sounds it. Sounds it.
the overall, valuation methodology is not aggressive. There's a prudence to it. Of course, there's underlying risks. You're going to have some winners. You're going to have some that don't deliver. But, across the portfolio, you hope there are going to be enough winners that really can drive that growth going forward and
Mm,
ultimately, deliver that compelling return. So I think that's a message that we need to get out. We can talk about it. What's much easier, of course, is if you deliver the tangible
yes.
realizations. And as I said, we've delivered some. We need to deliver more. And hopefully, over the next 2 to 3 years, there'll be some great proof points that people get excited about, can point to, and say,
Yeah.
well, this is why we want to support Augmentum and have some exposure to the underlying assets.
But this vehicle of investment trust, I guess that one of the advantages must be your ability to attract international investors, because, of course, the shares are listed on a major stock exchange. Uh, but equally, there must be some disadvantage, other disadvantage. I've heard that I've never owned a PLC, but I've heard that the regulations are huge. Having a stock market
So I
listed
think
company, is
you
that
go
been
in
your
with your eyes
experience?
open. If you are going to run an investment trust, then that comes with important obligations, and so
Mhm.
we navigate that. We have a team that specialize and focus on that, and that comes with the territory. And so
Yeah.
that's just an important necessity of being public, and you just get on with that
Uh-huh.
as part of the job. I think the international investor piece, of course, people can more easily invest in the London market. The
Mm.
reality is we tend to attract a pretty domestic audience. So we have a lot
Okay.
of
Mm.
UK retail investors. We have a number of the large wealth managers. We have a couple of pension funds. There is some international presence on our shareholder cap table, but fundamentally this is predominantly held by UK investors. And there has always been the perception that this is an opportunity, but I think the London market, as a general trend, has been struggling to attract international investors. But not only that, I think
Okay.
one of the big challenges we've had has been our UK pension funds have really moved away from the UK market over the past 20 years. And relative to other G7 countries, if you think of our UK pension funds as a percent of the overall market, I think it's around less than 5%,
Yes.
and the
Quite small.
G7 average will be more like 20%. So
Mm.
we really aren't investing and supporting UK PLC, which is a great shame.
Mm.
And as I said, we've really struggled to get support of UK pension funds, and yet if you look at UK and European venture capital, Canadian, Australian, American endowments, pension funds are all investing in what's been an incredibly successful asset class as a whole. And yet our UK pension funds have been sitting on the sidelines delivering weaker returns than their Australian, Canadian counterparts. And that's in some parts as a result of their lack of exposure to, these higher growth asset classes that, if you get it right, deliver better returns. And so we all know that there's some pressure for UK pension funds to have a more diversified portfolio, and hopefully over the next few years we'll see that develop.
Yeah, it's a great pity that the UK market's not thrived since Brexit, but hopefully it'll turn around, because these things do tend to go in cycles, don't they? Although it's all about the Magnificent Seven, history tells us that the great businesses don't dominate every single decade. And in fact, the US market doesn't always dominate. It just feels that way, the way it's gone the last 10 or 15 years. So, Tim, it's been very interesting what you've had to tell us about Augmentum Fintech. How about you? What do you do in your spare time? Do you get any spare time as a CEO of a betting
Yeah,
company?
it's a good question. I mean, life is busy with our 25 portfolio companies. I always say I have the night job where I've been a elected councillor and then alderman in the City of London. So doing some
Interesting.
public service, which has been really interesting for me, where you
Uh-huh.
can play a role, a non-politicised role as an independent candidate. You can give back, but also you can really help promote the City of London as a
Uh-huh.
global financial services centre. So that's kind of been something which is an unusual role, but one in which I really enjoy, which is very different
Yes.
to the day job. But
Yes.
also, I can bring some of my experiences in my day job, and hopefully the city of yesterday can also look forward for the
Yes.
city of tomorrow, where fintech is going to play a pretty significant role in
I
the
think it
future of
will.
financial services. So
Yeah.
that's that takes up a fair bit of spare time, and alongside that, I've got 3 kids,
Oh, wow.
and that
Me too.
that that keeps you busy. And when I can, I go and endure. I would say endure because I've been a lifelong Chelsea fan. It's been a long held family affliction. So if I can get to Chelsea on the weekend to watch them, then that's kind of always a good thing to do with the kids, alongside trying to play the odd round of golf.
Tim, there's so many similarities between you and me. It's remarkable, but I won't bore the listeners with listing them. But surely, if you lived in North London, you should be supporting my team, Spurs.
Well, that would have kind of added a lot of stress to my life if I'd been a Spurs supporter. But the family business was opened in the 1800s on the Fulham Road. So my
Oh,
great
I see.
grandfather opened his first shop,
Ah,
which
that
was
explains it.
an antique silver business, and sold coins and stamps in the late 1800s, and that was on the Fulham Road. And ever
Nice.
since
Yeah.
Chelsea were formed in 1905, someone in the family has been walking down Fulham Road watching Chelsea. So yeah, it's been
Well, of
a
course, Chelsea's
long-held
had a lot of
family affliction.
success the
There've been
last
good times,
20 plus
and
years, but there was a
yeah,
long
I would
spell
say
where they
my
were in the
kids have had the good
wilderness.
times. My
There was a long spell they
my
were in the
childhood
wilderness.
was in the wilderness, but
Yeah. You can remember when
yeah,
they
but
used to be in
as
the old
my
second division for
I was
many years.
there week in,
For
week
many
out, and as
years.
my old friends say, they kind of say, "Well, we don't like all this modern success of Chelsea, but we knew you when you were in the old second division, getting beaten 6-0 by QPR." So I think there's some resilience was required, but yeah, it's as I always say, you can't change your team,
No,
and
of course you can't.
you
We men are more faithful towards our football teams than our wives, you know?
no comments on that.
I mean, in terms of long relationships, we're married to have we'll follow our football clubs for life is what I mean. Um, yeah, so moving on, what are your plans for the future apart from continuing to grow Augmentum Fintech, which is already a very successful business? What plans do you have in other aspects of your life? What other goals or aspirations do you have?
Well, I think you always reflect when you start a new decade. So I've just turned 50
Hmm.
in the last few months. So it's always a good moment to reflect on what
Hmm.
you achieved and what you haven't achieved in the previous decade, and what are your objectives for the next decade. And so
Yes.
I don't think you can look too far ahead. I think for me, I think there's a long way to go in terms of what we're building at Augmentum. I think the entrepreneur in you is never satisfied. You want to keep
Hmm.
building.
Hmm.
You want to kind of look back a little bit, but at the same time, you want to reflect and say, well, what more can we do? And I think the ambition is continue to grow what we've had,
Hmm.
and build on some of the success that we've had in Augmentum. As I said
Yes.
at the beginning, I'm incredibly excited about what the future holds for the UK fintech industry, and I'm really hopeful. I'm a passionate Brit, and I really want the UK to succeed and continue to,
Yes.
be one of the dominant players. And I feel a huge personal obligation to play a small part in that journey. So,
Yes.
that for me is really important, that we build on the success of the past, but also look forward and don't rest on our laurels. So I think, yeah, I think I want to continue to help build businesses, identify great companies, mentor the next generation of entrepreneurs, and investors as well. And I think if I can look back this time in 10 years, and Augmentum perhaps is £1 billion rather than £300 million in size, and we have created hundreds, or helped create hundreds of successful fintechs across Europe, but also generated thousands of new jobs as well. And I think that will be a success, and hopefully given our investors some success along the way.
Yeah, it's quite refreshing to speak to someone who's particularly patriotic. We don't get much patriotism anymore. And I share your views. I do think fintech's a great sector, and I think it appeals to the natural abilities of Brits, ever since the Industrial Revolution, to be very creative, have brilliant minds scientifically, and also engineering wise, and having great ingenuity, and I think that appeals to me. And I think there's no reason why we couldn't have a second Great Britain. I'm probably getting a bit carried away now, but why not? We've certainly got the the intellectual capital, the ability to do it, and we've got the great chance now to do it with fintech and other areas of technology. So I really admire you for doing that, Tim. And it's been a great interview. I really enjoyed speaking to you, but sadly our time is now up.
Well,
So,
I enjoyed that too, Tony. And as an entrepreneur, you always have to be optimistic. You have
of
to be
course,
glass
yeah,
half
I love
full,
that. Yes,
and you
yeah,
have to kind of look ahead. And I think we've got many
yes,
challenges, but at the same time, with challenges come great opportunities. And I think we're really well positioned to capitalize on that over the coming decade.
totally agree. As Winston Churchill once said, I've always been an optimist. I couldn't see the point in being anything else. So, on that note, thanks very much for your time today, Tim. It's been an absolute pleasure. I look forward to meeting you at future events in London.
Likewise, Tony. Thanks
Thanks
for
for your
the time.
time today. Thank you very much.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.